Well, let's have a look at what we do with our plan rules in the process of backtesting, forward testing, paper trading, and then real-time, real money. Based on what we've been through, we would have a set of rules for our signal. Hello, it's time to trade and which way. You've got to have a way of working that out. That's determining coming trend. You've got to have an entry methodology. I've given you an example of SDKM. It also contains a stop loss, and I've stepped through a trailing take profit methodology. We've got to tie those rules down, and we're going to do that by looking at the backtesting period. So what I've got here is a chart going way back into the past, and the right-hand most of these squiggles, these up and down squiggles, is now. And this could be 10 years, could be 20 years, depends on what sort of trading you're going to do. It could be 3 weeks if you're on really short trades, but the concept's the same. You go back to what we'll call a backtesting period, and you need to get at least 30 trades in that backtesting period. 50's better, 80's good. And you get those trades into an Excel spreadsheet based on following your rules and tracking bar by bar by bar by bar. G'day, sorry for breaking in, but if this content is useful to you, you might like to like or subscribe. And if you want to go deeper, head over to futuremechanics.com. You'll find access to a whole range of things there that you might be very interested in. It's the best place to start your journey into cyclic knowledge. Then you go to forward testing. You lock the plan down so you can change your plan in the back testing. You can alter the N bar value from 3 to 4 to 5 to 17, whatever you want. But once you've got a plan that looks like it's good enough, and there are metrics that allow you to answer that question, is it good enough? You lock it down and say, no part of this plan can be changed. And you run the whole show on the forward testing 1 period. And you take the trades bar by bar into an Excel spreadsheet so that you can get the entries and the stop losses and the take profits. And ultimately, you're looking for a column of profits and losses such that at least you've got some profit. Then you do the same thing in forward testing 2. And then you do the same thing in forward testing 3. So what you're doing is you're saying, this plan I developed in the back testing, will it work on sight unseen market bars going forward? And if it does in each of these forward testing periods, you've got to tick against that plan. Because let's face it, when you step up to do paper trading, which is the next thing that you're going to do with virtual money in a demonstration account, even you haven't seen the bars, let alone your plan. And of course, after you put a tick against the paper trading, it's not so much the plan now, it's you. Can you follow rules? Do you have discipline? Execute flawlessly, first time, every time. And when you're comfortable with that, then we can go to real time, real money. Now, at this stage, I'm going to show you the paper trading in advanced cycles. This is what we fill out. So I provide an example plan in advanced cycles, and I make all the calls ahead of time in terms of trading long, trading short, etc. There's no coulda, woulda, shoulda about it. And we fill in things like the signal date, the high value, the low value, the entry date, etc., the exit date, all sorts of information. And then eventually what we want is a running total over here. Well, from the 16th of April to the 7th of July, now this isn't finished, we made 7,676 Dow points. And if you think of that in terms of $1 a point, then from April to July, we made almost $8,000. And there's the chart of it, showing that we've had 1 loss, 2 losses, 3, 4, 5, 6, 7 losses, and 1, 2, 3, 4 profits, profitable trades. And there's all sorts of information over here, which unpacks some metrics in terms of being able to measure how good this is. And at this point in time, it's pretty darn good. So that paper trading, I've done that now 35 times. I reckon 75 to 80% of the campaigns have been hugely profitable, like this one. The other ones have been losses, but not large losses. And you say, well, hang on a minute, you've got a proven profitable plan. Yes, it was developed like this, but you can't expect that even the world's greatest plan is going to be guaranteed to be profitable every time that you step up to the market. And I reckon 75 to 80% of the time, having campaigns profitable is sufficient. All calls ahead of time. Oh, and the other thing, I start the paper trading when the first person pays. That's not smart. That's not the time to start a campaign. This paper trading that I do in advanced cycles is a demonstration. But even though I started at essentially random times, it's still pretty good.